real estate versus stocks. Where should you invest? Hey there, welcome back to the channel. Today we're diving into one of the most debated topics in the world of investing, real estate versus stocks. Where should you invest? Both are powerful ways to grow wealth, but they come with unique pros and cons. So if you're trying to decide where to put your hard-earned money, stick around because we're breaking it all down for you. Let's get started. Number 1. Why compare real estate and stocks? When it comes to building wealth, real estate and stocks are two of the most popular options, but they're fundamentally different. Real estate is tangible. You can see it, touch it, and even live in it. Stocks, on the other hand, are intangible assets that represent ownership in a company. So the big question is, which one is better for you? The answer depends on your goals, risk tolerance, and how much effort you're willing to put in. Before we dive into the specifics, let's address the elephant in the room. You don't have to choose one over the other. Many successful investors use both to create diversified portfolio. But for now, let's break them down individually to help you make an informed decision. Number 2. The case for real estate. Let's start with real estate. One of the biggest advantages of real estate is stability. Property values tend to appreciate over time, and even during market downturns, they rarely lose all their value. Another perk, cash flow. If you invest in rental properties, you can generate a steady stream of income each month. Plus, real estate offers tax benefits like depreciation, which can reduce your taxable income. Think about it. Owning a rental property means you're essentially getting paid every month while your asset appreciates in value. Real estate also gives you a sense of control. Unlike stocks, where you're at the mercy of market forces, you can actively improve your property to increase its value. Renovations, better management, or even marketing your rental differently can all lead to higher returns. But real estate isn't perfect. It requires a significant upfront investment for a down payment, closing costs, and maintenance. And let's not forget the time commitment. Being a landlord can be a full-time job if you're not outsourcing property management. There's also the risk of vacancies. If your rental property sits empty for months, you're still responsible for mortgage payments, taxes, and upkeep. Number 3. The case for stocks. Now let's talk about stocks. One of the biggest advantages of investing in stocks is accessibility. You can start with as little as $10 and buy fractional shares of companies like Tesla or Amazon. Stocks are also incredibly liquid. If you need cash, you can sell your shares with a few clicks. Real estate? Not so much. It can take weeks or even months to sell a property, and then there's growth potential. Historically, the stock market has delivered an average annual return of about 7% to 10%. That's hard to beat. Another advantage is diversification. With stocks, you can spread your investments across different sectors, industries, and even countries. This reduces your risk because you're not putting all your eggs in one basket. But stocks come with risks. They're highly volatile, and prices can swing dramatically in a short period. If you're someone who panics when the market dips, stocks might not be for you. Number 4. Comparing returns. Let's talk about returns. Both real estate and stocks have the potential to make you a lot of money, but they do it in different ways. Real estate. Returns come from property appreciation and rental income. On average, real estate appreciates about 3% to 5% per year, but this can vary widely depending on the location. Stocks. Returns comes from capital gains and dividends. The stock market historically delivers higher returns over the long term, but it's also more unpredictable. If you're looking for consistent cash flow, real estate might be the better option. But if you're focused on long-term growth, stocks could be the way to go. Number 5. Risk and volatility. Risk is another important factor. Real estate is generally considered less volatile because property values don't fluctuate as much as stock prices. However, it's not risk-free. A bad tenant, unexpected repairs, or a market downturn can quickly eat into your profits. Stocks, on the other hand, are known for their volatility. Prices can skyrocket or plummet based on market conditions, company performance, or even global events. But here's the thing, with stocks you can diversify by spreading your investments across different sectors or using index funds. You can reduce your risk significantly. Real estate doesn't offer that same level of diversification unless you own multiple properties in different markets. Number 6. Time and effort. Now let's talk about effort. Real estate is hands-on. From finding the right property to managing tenants, it requires time, energy, and sometimes even sleepless nights. Stocks, on the other hand, are more passive. Once you've invested, you can sit back and let your money grow. You don't have to worry about fixing a leaky roof or chasing down late rent payments. So if you're someone who values convenience, stocks might be more your speed. But if you enjoy being involved and don't mind rolling up your sleeves, real estate could be a great fit. Number 7. The role of leverage. One unique aspect of real estate is leverage. With a mortgage, you can control large asset with a relatively small amount of money. For example, a 20% down payment on a 200,000 property gives you control of the entire asset. Stocks don't offer the same level of leverage unless you're using margin, which comes with its own risks. But remember, leverage is a double-edged sword. While it can amplify your returns, it can also magnify your losses if the market turns against you. Number 8. What's right for you? So which one should you choose? The answer depends on your financial goals, personality, and resources. If you want stability, cash flow, and are okay with the hands-on approach, real estate might be your best bet. If you prefer liquidity, accessibility, and long-term growth, stocks could be the better option. The good news? You don't have to choose just one. Many successful investors diversify their portfolios by investing in both real estate and stocks. At the end of the day, the best investment is the one that aligns with your goals and lifestyle. Whether you choose real estate, stocks, or both, the most important thing is to get started. So now that we've explored the pros and cons of real estate and stocks, I'd love to hear from you. Which investment do you prefer? Are you more drawn to the stability, passive income, and long-term appreciation of real estate? Or do you prefer the liquidity, diversification, and growth potential of stocks? Maybe you're someone who believes in a balanced approach, investing in both to maximize your wealth and minimize risk. Drop your thoughts in the comments below. Your insights could help others who are still deciding where to invest. And I'd love to hear about your personal experiences. Let's start the discussion and learn from each other. And if you're serious about growing your financial knowledge, make sure to subscribe to the channel and turn on the notification bell. Here we break down complex financial topics into simple, actionable insights to help you make smarter money decisions. Whether you're a beginner just starting your investment journey or an experienced investor looking to refine your strategy, there's always something new to learn. Also, don't forget to hit that like button. It really supports the channel and helps more people discover this content. At the end of the day, investing is all about making informed decisions that align with your goals. The key is to stay educated, take action, and build a strategy that works for you. Thanks for watching, and I'll see you in the next video.